Hello, everybody.
What's going on?
Welcome to Naples.
Yeah.
We're in Naples today.
We are in Naples.
What's up, man?
My wife asked me why the hell we're always down in Naples so
That's
often.
not true.
I didn't really have an answer. I didn't really have an answer. Hey, Scott DiGugario here.
Edgardo Valentine, and I'm out.
Yeah, that's it. So I'm doing this alone, I guess. But we got some pretty interesting things to talk about. And, dude, I think, look, let's get something easy out of the way first. Okay, there's a change happening to VA mortgages. So if you're looking into getting a VA mortgage anytime soon, there's going to be a change happening the first of the year. So when you're getting a VA mortgage,
not a good change.
No. It's getting a little bit more expensive.
Yeah.
When you take out a VA loan, VA charges in most cases, without getting too detailed, VA charges a funding fee, and that funding fee is added to the loan. But the funding fees are going up as of January 1st.
Yes.
Closings in January 1st.
And look, we both have in our video libraries on Facebook, and I know in your video library too, and on YouTube too, as video series on VA. So if you don't know what we're talking about, go to the video library, go to my videos on my page, go to his videos on his page, and then you can see everything about VA loans. The thing is, that's gonna go up. Now, in the same token, we still waive our fees when it comes to VAs, or those $1,100 in fees.
Let's all get back to our bets, people. What's up?
That's right. And it's an amazing loan, guys. 0% down payment. There's no mortgage insurance. And listing agents, please, that's the first video in our series. Please, this is not a bad loan, okay? People that are taking advantage of this is not because they're getting a handout, it's because they deserve it. And that doesn't mean that they're not qualified. This just means that this is the best loan out there for them. So get those VA loans accepted.
You want to step down off the soapbox?
Come on, man, but it's true.
No, bro, listen, man. Anybody who's seen me in my seminars know that I go on rants about people shunning VA offers that they have the freedom to shun because of our veterans. So,
right.
I mean, I'm with you on it, man. But anyway, so that's that. And then...
well, let's get close. So VA loans is 100% financing.
Right.
Let's try to get as close as possible as 100. And the nearest thing that we have is 99% conventional loan.
Yes.
That means you only put 1% down, peeps.
And this is on single-family homes and condominiums. You got to live there.
You have to live there.
No mortgage insurance.
Wait. Condominiums too?
Dude, 99% condominium financing. What up?
No mortgage insurance. And guys, we've done this over and over again. I know that I've sent this to all my realtor database. And by the way, if you're a realtor watching this and you're not getting my video emails every week, just DM me. DM me with your email address because, look, it's a lot of good information. And the last one, or one of the last ones we did, is a comparison between a regular conventional loan with you putting 3% down and a 99% loan with you just putting the 1% down. And oftentimes, most of the time, if there's good credit, the 99%, you have cheaper payments because it doesn't have mortgage insurance.
Yeah, and that mortgage insurance on a 3% down loan,
it's high.
It's not cheap. So look, that's a good product. So look, big picture, here's the nice thing. Mortgage products are continuing to evolve. They're continuing to be developed. They're continuing to expand. And that's a good thing. Whether or not that leads to a crisis in 10 or 15 years, I don't know. We'll deal with that in future Facebook Lives. So,
that's great.
Yeah, I'm just putting it out there, man. I'm putting it out there. Let's talk about, let's talk about the freaking market. So that's the bulk of what we want to talk about today.
The market.
So look, I'll get us started, okay? We have talked about time and time again that it's all about this China thing, okay? And a couple of days ago...
It's all about China.
Yeah, it's all about China. A couple of days ago, the Ministry of Trade, or whatever the heck the guy's called in China, announced that U.S. and China were both mutually agreeing to lift the tariffs, a portion of the tariffs. They didn't get into too many details.
And it wasn't one-sided. We haven't had confirmation from the U.S. government.
Right.
Now...
but it was enough.
It was enough to move the needle quite a bit. This is why if you have a 401k, if you're looking at your stock market, we're at an all-time highs. But when that goes up, when your 401k with the stock, when the S&P 500 goes up, we take a hit. There's only so much money, right? So people are taking money out of the bond market and putting it in the stock market because the economy...
And interest rates go up accordingly.
Seemingly to go up, and interest rates go up accordingly. And then what happened yesterday that we were seeing is that there was... And this is all symbolic, you know what I mean? But there was...
That's true. not shit's really happened.
Yeah, nothing has happened yet.
This is just all conjecture and theory.
It's all gossip.
Yeah.
It's high school stuff.
Nice.
You know,
High school never ends, baby. Great song.
There was an arrest done by the Chinese government where they're cracking down on something that has to do with drugs, and the market saw it as a kind of like as China saying, "Hey, we're serious about getting our relationship resolved with America." And then that happened yesterday, and the market was again for the stock market, for the 401k, amazing, but for bonds has been it's been a tough, very very tough week. And it's important that we mention this because you gotta see every time that we get reports about where the interest rates are, we get reports from the month before.
Right.
So right now we get a report that the average 30-year fixed conventional loan, it's at around 4.07%, but that's based on the closings that happened last month. So what happened with the market yesterday, it's not priced into that 4.03%, 4.07%. And these are average pain points and all that. But my point is, it's important that if you're in the process of buying a house, or if you're talking to people that are buying a house, that you understand when the report came out and what's happening today. And very importantly, if you are in the process of buying a house right now and you're under contract, make sure that you talk to your lender about what's happening with the market, because those are big swings.
They're big swings, and you know, I mean, you're talking about going back a month in advance, and some reports go back a week in advance.
Sure.
People have to understand that you could go back an hour and have a totally different picture. So, I mean, yesterday at 9 a.m., 2 p.m., and 5 p.m. were three different planets. I mean, 0.25% swings in interest rates.
Yeah.
It probably went up a quarter and then down an eighth.
Even today, I mean, we're having a big swing. It hasn't changed much because it's staying here, but
I think it's important to mention and use your escalator analogy. Okay, please understand, and we've been saying this all along, that although there's ups and downs day to day, the overall trajectory for interest rates is down.
It's down.
Okay, now is it down at this angle? Is it down at this angle? We don't know, but the overall trajectory is down. So if you were doing a yo-yo as you were going down an escalator, although the yo-yo would be going up and down, the trajectory would be down, and that's what's going on with rates.
Look, and again, we talk about rates, we're dealing with it, and our job really is to protect our clients and to make sure that within that period of time where they get under contract and they close, we get them in the lowest possible rate, right? We watch the market, we make sure that it's the thing for them. Obviously,
we educate them
with the programs and all that we're talking about. However, overall, we're still at a very, very, very low rate environment, much lower than we were 6 months ago. It's still an amazing time to buy a house, and guys, it's just good.
Yeah, and look,
stuff.
Here's another big misconception. I deal with this all the time with people, is that they think the rate moves the needle a lot more than it does.
Yes.
Okay, I was talking to somebody yesterday, and we were debating. We're not debating, but we're discussing the pros and cons between the two interest rates. And obviously, look, the lower your interest rates, the higher your costs are, and vice versa, right? So there's a thing there. But and we always give clients those options so they could choose. But in this particular case, the difference in rate was 0.25%, and the difference in payment was like $21 a month.
Yeah.
Or $22 a month, and she was like, "That can't be right," and I'm like, "It is. Like it just doesn't move the needle much." And I got to be honest, if that $22 is pushing you out of affordability, you're buying too much damn house.
Yeah, and going back to what we started with the 1% down payment, that program has a higher rate than if you were to put 3% down. But because of the mortgage insurance, your overall payment is still cheaper. And so there's other factors that will affect your payment more than just the rate itself.
Yeah, look, we talk to clients about this all the time. I mean, what are the rates? What are the terms? What are the fees? What are the taxes? What are the insurance? What is the mortgage insurance? Like, there's people focus on one or two things, and frankly, it's in so many cases that's all they know to focus on.
Right.
Right. You know, it's. You know, I remember back in the day. You don't really do it anymore, but back in the day when you got a car, everybody would open the hood. You'd open the hood. Everybody would look at it, and I remember being a teenager doing that, thinking, "Yeah, it looks like a freaking engine." You know, like I don't know. You know what? It looks looks like a big engine. It looks
Right.
like a pretty
Right,
engine.
right,
Like,
right.
you know, now I'm sure more knowledgeable people could look at that and go, oh, it has this kind of manifold and blah, blah,
Sure.
blah. And that equates to, like, I don't know. So, you know, I was ignorant about that. So I knew to look for one or two things. And most people do not understand financial matters very well. So they look for one or two things, frankly, because it's all they know. And our job is to open their eyes to the big picture. And the big picture's, you know, huge. A lot
It's
of
huge.
times.
So, anyways, having said that, the market is still strong. We have lower interest rates. We have much lower interest rates historically than we had even 6 months ago, which is still bringing a lot of people and affordability up. So there's a lot of people that can afford houses today that couldn't afford it before, which tends to push prices up. And I'm sure you're looking, especially when it comes to entry-level housing, this is not just happening here in Collier County or Lee County, this is happening throughout the country. All of those houses that are, you know, anywhere from 180, if you can still find them, to $300,000 are going quick.
Yeah, and that's another interesting thing to point out. One of the things that's happened with this spike in interest rates, or this drop in interest rates, is a similar reduction in inventory. I know in Lee
Yes.
County, we're down to 4.5 months of inventory. 6 months is considered a balanced market. Less than that is considered a seller's market. And so, as a result of that, sellers are now getting over 96% of asking price. It was 95.5. So inventory's down. It's a more competitive market.
What happens when inventory is down?
Prices go up.
Prices go up. So appreciation is still strong here. I know we're gonna do a video on the particular counties and what we're seeing when it comes to appreciation.
That's gonna be a cool video
when it comes to all of that. But the guys, there's a lot of people out there that can qualify. There's a lot of people that are watching this that can qualify. One of the biggest reasons people don't want to get into a home is because they think they need to put big down payment. They think that maybe the market is not going to follow.
They think the payment's higher than it really is.
They think the payment's higher than it really is. And hey, we don't charge per hour, unfortunately.
Yeah.
We're not.
It
like
would be
bars.
great if we did.
We can't bill you.
Yeah, it would be nice. So yeah, pick our brains, man. Pick our brains. And hey, look for, we're putting out some longer content with the market analysis video he mentioned. We also did a pretty in-depth video on why a recession is coming and kind of some detailed analysis as to why that's the case. So
What's up, Amber?
what's up, Amber? So keep an eye out for this longer videos and let us know. Dude, I think that's it.
That's it. That's all we got. If you have any questions about interest rates, about what we think is going to happen in the future, appreciation, or the future of the market itself, comment.
Yeah, and if you want to start the process and get qualified, you can apply online with me at floridaloanapp.com.
And I'm at Southwest Florida Loan App, SWFLLoanApp.com.
All right. Well, we'll see you next time, everybody. Take care.
It's faster than a rocket. Is that what
Yeah,
you're
it's
saying?
faster than a rocket,
faster
baby.
than a rocket.
Off. You got me? Appreciate you doing me last.